I'd like to welcome to the stage 5 very astute investors. The first is from Investment Director at Intel Capital, B. Rana. And why don't you just walk up to the stage when I introduce you? He's responsible for sourcing, making, and managing investments for the VC unit of Intel. 14 years at Intel, and he's worked in India, the US, in Europe. He's a board observer at 13 tech companies and has achieved 18 exits from startups. Wow, that's some track record. And next, I'd like to welcome to the stage Ranjith Menon, Senior VP at IDG Ventures India, where he's worked since 2007. His areas of specialty are engineering, healthcare, and electronics sectors. Previously, he was a manager of marketing at Infosys Enterprises for 7 years. He is a board observer at Mentra, among 5 other startups. Next, Rahul Chowdhri is a partner at Helion Ventures, where he focuses on e-commerce, digital media marketing, education, and retail sectors. Prior to joining Helion in 2007, he was group program manager at Microsoft for 2 years and associate director for Market RX in New Jersey. So he's got a well-rounded experience as well. Sandeep Murthy is a partner at Lightbox Ventures. Many of these people I interviewed for my book, Startup Asia. So I interviewed Sandeep previously, and when he was with Sherpala and Kleiner, now at Lightbox Venture, and they just closed a new fund. His credits include funding 2 of India's most successful startups, InfoEdge and InMobi, with a third, Green Dust, on the way. We would have had the CEO of Green Dust here tonight, but he's got another delivery on the way. His wife is expecting any moment. So stay tuned. He'll be back next year. Sandeep took an operational role at ClearTrip as chairman for 2006 for 8 years. So a lot of experience there as well. Next, Veena Avadhanam is VP at Mumbai Angels. Mumbai Angels has been really helpful in helping us get the word out about this event. And for the past year, she's been engaged in the startup ecosystem in Bangalore. She moved here from Silicon Valley. 15 years of experience in strategic advisory and management roles. Most recently worked in Silicon Valley at Symantec in corporate development. So let's give them a round of applause. They took time to be here. These are some of the leading VC angel investors here in the market. So I'd like to start off asking, we're seeing a lot of renewed energy now in India, and I think with a lot of new VC funds being formed, a lot of new investments being made, huge investments being made. Do you think that this is time for Startup India? And if so, I mean, what are kind of the hurdles that Startup India is going to face? Let's go down the line. Sandeep, you're at the end. Why don't you start?
I guess we were out trying to raise money for quite a while. And so we had a chance to go talk to a lot of people, tell the story, kind of say, here's why India is going to be great. Here's all the fantastic opportunity, the market size, the potential, the future. And quite honestly, for the first 2 years, we started back in 2012, late 2012. Either people had come here and not succeeded, and so they said, look, yeah, right, I've heard that before. Or people who hadn't come had looked at everyone else who hadn't succeeded and said, sure, we've seen that before also. So I think it was a big challenge for a while to get the story straight and perception. And I guess just a pure sense that things will actually move as you expect them to was lacking. And so predictability didn't exist. And so for a long time, it was an uphill battle. I think to your question of is now the time, or things happening, again, you have to take it with a pinch of salt because I've been saying it for 8 years that now is the time. But yes, now is the time. And it's fundamentally, look, we invest in technology-driven businesses. When I think about India, India is complex and fragmented. Solving problems in an offline manner is just not going to be possible. So technology is going to be an enabler, and probably an even bigger way than you've seen in other markets. So Amit was talking a little earlier about online, offline. It doesn't matter. It's the customer. The customer needs stuff. The customer is going to need more stuff. The customer is getting shifting more from needs to wants. And as that happens, they're just going to look for things. And technology is going to be the platform that can deliver it. So I think with a government that's providing an overarching cover of predictability, I think technology companies have a chance to kind of really emerge and show what they can deliver.
Rahul, what's your viewpoint?
So Sandeep kind of summed up very well. The way I see it is there are few positives and few question marks still. The fact that consumer adoption of technology is happening is not a question mark anymore. Government being in majority is very positive. But I would still say that monetization of consumer is still, in terms of making money from a consumer, even though they are adopting technology, is still a question mark. But maybe we are at right stage. 3-4 years from now, we should reach a point where, where the ASPs from a consumer make sense, margins make sense.
Yeah, from our side, I mean, pretty much the same story. But I mean, just to give you some numbers of what we see at the fund. We started the fund in 2006, IDG here in India, and we were seeing very few deals at that point of time. And today, in the last 8-9 months, we've seen 1,200 plans. I mean, just to give you a data point as to how many companies are just entrepreneurs starting up businesses and reaching out to investors. And we see and we believe that's a great time to be here and start a business right now in India.
From Intel Capital's perspective, you're investing throughout the world and investing a lot more recently in Asia as well. So how do you think India fits in at this moment?
I think the one change that's come about, and I say this because I've been investing in technology venture capital since 2000. I started my career here investing in India. I think it's a confluence of different factors that have come about that make you a little more optimistic. But I think that it's a very valid question to say, why is this night any different? We've seen this story play out before. I'll give you an anecdote. I was sort of involved in the incubation of a startup, Tejas Networks, and that was in 2000. And I remember at that point when we brought the team out, the entrepreneurs were leaving very successful careers at multinational companies. And they were stepping out and forming a company, and to bring employees to that company, we actually had to do open houses, with an entrepreneur like Deshpande, to assure families that their kids or their family members were not, going and doing something completely harebrained, right? That's changed now. That's changed because you've got a lot more success stories. You've got entrepreneurs in the room out here who are referenceable, and there's a lot more talk about that. Secondly, I think the other thing when you look back over this, over 14 years, and we compete for dollars in the same way as most funds who have a global presence, and even venture funds who raise money from overseas. From an asset allocation standpoint, India waxes and wanes as far as how the political environment and the macroeconomics go. But the one real difference now is I think we've now hit critical mass on a couple of vectors, right? We've got about 100 million smartphones, we've got 200 odd million internet subscribers, we've got 55 cities that have a population over 1 million. So these are very clear marks or markers that you can lay down and say, I think the trend from here is certainly optimistic. And that's what sort of inspires us, because I think everybody out here is people who look at things with an optimistic bias.
So you're going to be investing a lot more in India?
I'd say that, yeah.
Yeah? Okay. Like, give us some context.
Right, I'm being put on the spot. Yeah, I think we're slightly different in the sense that we are a strategic investment arm. So we will do things that are, sort of fit our strategic mandate. So you will find us looking at product companies that are in either data center automation, Internet of Things, data analytics, as opposed to necessarily deploying capital in, say, internet services or the build out of that. So I think you'll find our appetite a little more nuanced in that regard.
So those are the real happening areas, data analytics and Internet of Things, right? From an angel investor's perspective, you have enough deal flow out there?
Yeah, actually, ours, fortunately being an angel network, we don't have to fundraise at a certain cycle. But then on the other hand, we're always fundraising. The good thing is our members are more like, if we find the right deals, we can find the funds, because there is no pool as such that's already accumulated to be invested. So it's about finding the right opportunities, and of late there has been a lot of interesting development that way. I mean, I can say that in both Bangalore, in fact in Noida and in Mumbai, we have found a lot of interesting companies being built by very young entrepreneurs who are pretty much not really done anything other than build the company they are into. And these are like really brilliant folks who are very passionate about what they're doing. And the slight nuance with an angel network is, I think it's easier for us to get deals funded that are addressing an easy to understand problem, right? If our members get it, if they can see the value, it's easy to raise the funds. If it's a fairly complex, like it's a platform for artificial intelligence and it's providing tools, it takes more time for us to get through that hurdle. But yeah, the deal flow is good and the member interest is good right now.
Are we going to see Baidu, Alibaba, Tencent out of India? And if so, what time frame? Anyone on the panel here? India only needs one huge success like that, right?
Yeah. So, so actually, if you think about it, the point I was trying to make earlier as well is that technology is really the only choice. So if you take retail fragmentation that exists, it's 6% organized. To actually organize it in an offline manner is going to be next to impossible. All the mom and pop shops that are out on the street are not going anywhere. And so as a result, the scale that you could probably achieve in an online channel will be much faster than you may have seen in many other places. So as a result, and I'd imagine that's the opportunity many of the e-commerce companies are chasing after and looking at and saying, wow, I could actually be massive, not just in terms of distribution, but even in terms of the brands. And so the next step of that is, can you sell that story to a public market, and can you make it an IPO and everything? And I really like what Bhavish said earlier. It was, he was like the ignorance of the mindset of just entrepreneurship. I just wanted to go after it. I just want to build it. And I think if you can get investors to support that and say, look, I believe that the opportunity is coming. I believe it's going to be so massive, and I believe we're going to follow after it. Perhaps the public market will support that valuation as well, and perhaps you'll see companies go public earlier rather than later. If not, they'll happen in time, because these companies will hit great scale and monetize and do well. So yeah. So I'm a believer.
So you what?
I'm a believer.
Okay, he's a believer. Okay, good. Any other believers or pessimists?
So I think we are already seeing companies of that kind as far as valuation is concerned. Maybe not in terms of public market, but at least private.
Yeah.
You know, when you raise private money at that time. Also, one needs to understand that China is 5 times larger than India, right? So, in terms of size of companies, we have to keep that in context. But relative to what you see in India, you know, company like Flipkart, the kind of valuations they are getting is definitely very encouraging.
Yeah. Yeah, it is interesting that you're seeing this consolidation trend happening now in India, which happened in China too. So Flipkart and Myntra. Are we going to see more of these kind of M&A deals happening in India? And if so, what sector?
I think see, if you look at India, I mean, there are very large businesses that are built on the digital consumer space in travel, in recruitment, in now you have the Flipkarts of the world. So our belief is that going forward, you will see a lot more consolidation in these sectors, where we're seeing interesting models that are coming out in each of these sectors, whether it's travel, whether it's recruitment, with interesting perspective on the market, because these companies were started much earlier than the mobile revolution took over, right? So to that extent, we will see a lot more consolidation happening, and that's our belief.
Yeah, I think, Rebecca, you probably see it in pretty much every category, because if you look at it, the proxies that are out there is that you get a couple of rabbits that go out, get big, and then they start becoming the consolidator, and then the companies that struggle, not necessarily for want of execution, but capital starts flowing to the leaders in that category. That forces them to be the consolidatee as opposed to the consolidator. So I'd say pretty rationally that you could argue that all these categories that are springing up right now will see natural consolidation.
Mostly domestic? India?
So one,
yeah, the consolidation trend.
One, I would say, word consolidation has a negative connotation at times. So I believe in sectors which are large, you will see companies acquiring others, much as it happens in China also and in US. And these would be large companies acquiring another large player, or maybe not as large as them, but significantly decent sized player. Because the opportunity is large, as in not everything can be built in one go by one company. So that definitely should happen.
Veena, did you want to add something?
I was just wanting to add that, yeah, in internet services, you'll see a lot of consolidation, both India, and companies from outside acquiring companies here, like the Redvest acquisition. Basically, that's the nature of consolidation, right? You're just trying to expand market or expand into products that you're not already in. But I think the smaller wave of acquisitions is really going to come from these specialized acquisitions to plug product feature gaps that I think we are not seeing too much of yet, but that's really where a majority of the exits in the US are in acquisitions, and that's where we should be looking to kind of focus for the smaller exits as well.
So we're seeing these large valuations for investments in startups now in India. Is this ultimately going to be a negative for Indian startups, where they're going to get too expensive and seem too risky for venture capital and angel investors? Or not?
No, look, again, I'm a big advocate that the market's huge and we have a great opportunity. So I do think that there will be fallout and some sort of damage. So while on one side, let's say acquisitions will take place, on another side, a fair number of these companies will fail, and a fair amount have in the past as markets have grown, and it's fine. They enable consumers to come online. It has never been a better time to be a consumer. I mean, it's just amazing. Every morning you wake up, there's a new deal for you, there's a new offer out there. I don't know, it's the best time to buy. So that won't sustain, and companies can't last doing that. So as a result, but equally, every single one of those companies has the chance to be the guy at the forefront, and they're going after it, which is fantastic. So I think that you could say, you'll look back in retrospect and say some of these companies were way overvalued, but the guys that won, you'll say were way undervalued. And so if you pick the right one, you're going to be very happy. Okay.
It's all about risk and timing, right? Anyone else on that topic?
No, again, I mean, I think it's great for companies that they're getting the valuations that they're getting. I mean, it also kind of, proves to people around that these kind of valuations is possible in India. I mean, 2006, 2007, when we were sitting and talking about, the investments that we were making and what could pan out in the next 3-4 years, there were all question marks. Can these, can companies reach these valuations? Is it actually possible in India, and so on and so forth? So today, with examples of Flipkart, Bhavesh here on Olo Cabs and stuff, it's been proving the fact that these kind of valuations are possible in India. I mean, obviously there will be some damage given the post monies that these people are sitting on. Some of these guys, it has a kind of a drop-down effect on expectations in terms of valuations from companies or entrepreneurs who are just starting off their business, which is also what we're seeing. But I think overall, I think it's a great thing for Indian entrepreneurship, the fact that these companies are being valued at the valuations that they're getting.
We have a lot of entrepreneurs in the audience here today. What advice do you have for them when you see them come to pitch you? What is kind of the biggest mistake they make? What advice, what's the number one lesson that they could learn about how to really pitch a VC?
I think one of the challenges entrepreneurs have is trying to describe what exactly their service does or what the value proposition it has. And a large fallacy is by describing it saying, well, I'm the Uber for this, or I'm the Airbnb for this, right? I think that's one of the problems you have. You try and define what your value proposition is, recognizing that in India, you have things that are very unique. So Uber and Ola are great examples. You have an on-demand service in Uber as well as Ola, but Ola has the feature of reserving cars in advance. That's a great service for a country where you have a trust deficit, and you want that. You're not going to get up at 6 in the morning, or you're not going to get up at 5 in the morning for a 7 o'clock flight to Bombay and try and hope that there's a marketplace that's liquid of cars around you. So play to the strengths that you've got, really leverage the localization features that you have, because inherently that is developed by you're using your own product in the market you are.
Anyone have an anecdote to share of Something that was very telling? Sandeep, I know you're going to say something.
I'll say, look, I think that to your previous question on the pitching, it's the passion that I find the most important thing. So it's less about, are you framing it, you're putting the model this way or anything. Passion comes through so clearly. And for the state, we fund very early stage businesses. And I'd say that it's that feeling that you get from someone who really believes. We're having an internal discussion nowadays about data versus intuition. And this whole question about, look, when you're trying to understand something, and in today's world, I mean, big data, all this stuff plays into the story. You're trying to figure out, okay, well, how much data do I want, and how much is it about the person? And it's that person's belief. I mean, I know some of the stories about Uber, for example, where one guy wanted a cab. He couldn't get a cab, said, let me build an app. Right? I mean, Bhavish's story is not different. He needed a need. Had a need, needed it filled. I'm not saying every business is a great model off of your own experience, but your passion comes through, and you'll probably find a way through with that. So, so I would say that many, hopefully all the companies that we've invested in have had that at some point that's really clicked for us, and I think that's a big driver of the decision.
I have one, you're asking for what advice. It's a very minor advice, but what I really love is an entrepreneur who starts by demo of the product first before starting the presentation and everything else. So that clearly brings out what is the offering finally. And a lot of time, at least in India, I have not seen people starting that way. So my one advice is to start with your product, because that speaks for everything.
Okay.
I was just wanted to add that, of course, the product market fit that he talked about is key to any pitch. But I think to take the point about the team one step further, why this team is in a better position to address this problem compared to the rest of the world, if you will. I mean, just what is it that sets you apart, that will set your company apart, I think is something that people haven't given enough thought to before they pitch. It could be as simple as a first mover advantage, or there is some domain knowledge that you have that nobody else does. But there needs to be that differentiating thing that cannot be easily replicated, I think, for it to be a successful business eventually.
Yeah, for us, I mean, like I think any investor will tell you it's all about the team, right? And I can give you an example of an investment that we made in 2008, a company called Performant Healthcare. I mean, it's a company that kind of develops minimally invasive, a device that kind of helps minimally invasive procedures, right? 2008, and medical devices from India. I mean, nobody knew even if it was possible to actually build a business, build a device of world-class quality from here. And when they pitched to us, and there was nobody in our team who kind of understood healthcare technology. I was the guy who actually made the investment memo. It was actually, the memo was built as a robotic device that could do something in healthcare and possibly be taken as a platform to do something else in other areas, right? I mean, that kind of shows the kind of understanding we had of that space, but we backed simply because it was a great team. I mean, that actually built an ultrasound for GE, which is $1 billion product for GE from India, and they've absolutely committed. I mean, today the company is probably one of the very few startups in Asia that's gone through a US FDA clearance for the product and also a China FDA process. Now this, I mean, the company's evolved drastically, but when we made the call to invest at that point of time, it was purely based on the fact that massively committed team and extremely passionate about what they were doing.
Yeah, I remember meeting the CEO in your office at IDG and seeing the equipment. He demonstrated the equipment even. What you brought up healthcare. What other sectors do you think are really, really promising here in India, and what sectors should be avoided? Are overheated at this moment? There's a lot of activity in e-commerce right now. Is that overheated?
I think no, exactly. I mean, we don't think so. In the sense that we're talking about the internet population that is there. I mean, for all the e-commerce that we're talking about, the actual people who are transacting online is a very small fraction of that population who've got access to internet. So if you look at the delta that is available for them to reach out to with people who got access to internet, so the opportunity that we're talking about is extremely huge. So we at IDG are extremely excited about the digital consumer space. I mean, again, we'll have to look at it from a category perspective, horizontal, vertical, and the different models that are there. But digital consumer definitely still is a hot area for us. We're also looking at seeing interesting tech platforms using the SaaS model platforms that are there, that are servicing some of the e-commerce platforms themselves, which is like a domestic marketplace, but some interesting products that are built with a global perspective. I mean, we're not looking at building a product for India, but companies here looking to benchmark themselves to the US, what's happening in the developed market. Healthcare is another area we're extremely excited about. We've invested in two device companies. We've invested in one biotech firm, and we believe any tech platform that can bring about better access in the domestic market, given that the doctor-patient ratio is extremely skewed in India, right? We've got 0.6, 0.7 doctors to 1,000 people. So anything that can bring about better access. We're seeing telemedicine models. So those are areas that we think are very exciting for us, and as we see it today.
So actually, I think it's interesting as you think about India as a market, because it doesn't look like very many other markets. And so to kind of define buckets, it's a bit challenging, because when you think about it, the number of people that are going to come online, who are first going to come online with a smartphone and have never had access to email, never really dealing with legacy processes and legacy systems. To them, number of people that haven't had access to education in an effective way, never dealing with the question of going to school or not going to school as the model of education. Number of people as healthcare, like you mentioned, the doctor-patient ratios being bad. So when you think about that, I think the definition of industries and languages and that'll need to be supported, and the role that video will play, the fact that video is so prevalent at a time when people will first be getting online will redefine the way in which you'll actually think about providing services to people. So I feel like it's a great question. It comes up a lot as to where do you look, and actually we deal with this daily. Where do you look? And you kind of realize that everything's moving so rapidly and concurrently. Per capita income is growing at the same time that video is increasing, at the same time that mobile's penetrating, at the same time that organization is happening. So things just change in parallel, and I think as a result, everything you decided today changes tomorrow. And so really what we're doing is just trying to make sure you're with somebody who's watching that and working with them to evolve it.
Which is the better play, the consumer market side or the business market side?
I would say as of now, consumer for India and enterprise for globe. That looks like the right play. That doesn't mean that Indian enterprises will not become a large market. Hopefully they will. But that's the current market size or the adoption part.
So one of the panelists brought up the going global from India story. Is that a good strategy for a startup entrepreneur from India to automatically think about going global from day one, or is it better to stay focused like Ola Cabs is on the domestic market? You have InMobi, which is very global, right, and others that are very domestic. What's a better strategy, and how do you figure it out? What is the best path?
I'll just take the first pass at it. When you look at startups, that they're either built for global from day one or local, because they're completely two different paths to take on the day you launch. So I think the plan has to be very clear. The need for the local needs can be addressed very specifically by companies that are looking at the nuances here, whereas if you want to service the global market, he pointed out, you have to do it more from an enterprise point of view. The global consumer market is kind of not accessible right now. So the products will be very different and the strategies will be very different. I think there is room for both successes, but the clarity has to be there from day one. I wouldn't say that evolve locally and then go sell globally is probably not a very great strategy at this point.
I think in our businesses that have gone global, so we've had InMobi, we've had ClearTrip, we've had ZoomIn and Green Dust, all of which have expanded out of India. And the market has pulled them in those directions. I found that, for example, InMobi, when we invested, our starting point was great local opportunity, 400 million mobile subscribers, this is going to be massive, advertising's local. Small thing we forgot was advertising dollars are small. So it just wouldn't monetize here. So publishers started pulling us into other markets, and then the business expanded. Green Dust as well. We found that the places we were sourcing from, the supply that we were sourcing from, was looking to offer us the same opportunity in other markets. So we've managed to source in other markets, and so I think it ends up a flow of the business, and you have a mindset as an entrepreneur to be open to that. I think we have great entrepreneurs in the market in general who are flexible to that opportunity, and if they see it, they're willing to expand with it. And another one was ClearTrip, where we actually have become the largest online travel agency in the Middle East. It happened because Indigo, Jet, Kingfisher, Spice started flying there. We had to fill their plane on the way back, so we went there, and then suddenly we established a presence there. So I think that that'll continue to happen, and that ambition, as long as it's there within the entrepreneurs, it's a great opportunity.
I've been here reading the newspapers about Made in India, and this was a story of Made in China as well, and the Made in China story is now going global. What's the future for Made in India? Are there going to be models that develop here in India that are copied elsewhere around the world, like starting to be in China now?
So again, I would say that I think the companies are going to take them abroad. I think that they are.
So they're being pulled. But are there any original business model ideas or original type startups from India?
So I think the fragmentation that exists here is just going to become a process by which. So let's look at it. India monetizes poorly. So you have to do things efficiently. You're fundamentally doing things at a very low ARPU. So as a result, you build for a certain level of scale because it's India, and a certain cost basis because it's India. Those two things enable you to compete very effectively when you go outside. And I think that's an element that may make it more challenging for people that start elsewhere to try to replicate what we create here.
Okay.
Yeah, I sort of venture to say that I think Sandeep's company, the Just Dial, that's a really good model. If you think about it, doing local search differently, right? You've got Yelp, you've got people who've thought they can do local search, but if you look at the success they've had in marrying the needs of the actual consumer and having the offline presence woven into their online, that's a really good model. And that, I think, if you're going to look at where the India startups springboard to, you look for markets that are, we're not going to see the Just Dial clone go to the US and take their model. But I think the Just Dial clone would work really well in parts of Africa or parts of Southeast Asia that are not as developed. And so when you look at models for those, I'd see that he might be a tracking stock for that.
Okay.
So I can give you another example. I mean, we've invested in a company called Forus, which is in the ophthalmology space. Now, what they do is they actually develop a device for pre-screening the eyes. I mean, for cataract, for diabetic retinopathy, and so on and so forth. Now, what they've done they're an equipment company. Okay, they make these devices, but in the course of the last 2 years, what they've done is they've actually built a network of ophthalmologists, whom they've kind of empaneled into a network, and then they're taking this network with the device to a GP, okay, who's not qualified to look at the eye, and because when you go to Tier 2, Tier 3 towns, I mean, there's only one doctor there, and he's a general physician, for example. And so his ability to actually look at a guy's eyes and tell him there's something wrong with this network at the back end, right, is a model that they're working on. Now,
so that's original technology is what you're saying.
Yeah, it is original, I mean, in the sense that the model has always been there from a telemedicine perspective. But what is interesting is that this has been running for about 8-9 months now, and now we are seeing interest from Latin America, from Africa, to see if you can take the device there and still have this network back here, so that those populations can be serviced. And
so expansion into other developing markets where there's a lot of commonality.
Yeah, it's not just about the access problem, it's also affordability problem, cost of that healthcare delivery, which these kind of models are addressing, which is going out from here. So I think you will see that, but it will be very specific in most cases.
Okay. So we have a board observer from Myntra here on the stage, and I'd like to ask, what do you think is the future of Myntra?
Yeah, I mean, I'm no more on the board of Myntra.
You're not.
But yeah, I mean, see, it's a great.
You need to update your LinkedIn profile
no,
then.
No,
Gotcha.
yeah, but I mean, the thought process right now is to keep it separately from Flipkart, and both of them address different market segments, and have bring about very complementary kind of both in terms of the fashion quotient, the domain expertise, as well as the delivery capabilities and stuff like that. So the thought process as of now is to keep it separately, and that's the way it will be.
Is it going to go public? Or anyone here with a portfolio company that's about to go public? You're not going to admit it, I know. So a lot of you have just raised new venture funds. Could you talk a little bit about the experience of raising a new fund here for India? How difficult was that? I mean, because there aren't a lot of success stories here from India yet, so it must have been pretty difficult out there. I mean, how do you go about fundraising in this kind of climate for a market like India?
Okay, so yeah, we've been doing it for a while, and we went out there. And look, I think in general, things move in a wave to an extent, and the wave has come back to India, and now it's again optimistic, the macro's optimistic. So in all of that, people's memories get a little shorter, and they perhaps forget all the issues that they may have had earlier. And so suddenly the optimism comes back, and you start to feel, but of course, the next Alibaba will come, and it has to. And so I think that we're very much in a place where there's a belief that these things can happen. And so earlier, let's say a year ago, much harder. Today, I'd say that there's an openness to it. There's still the question, like you asked, no one's hand went up saying whose company's going public. Once that changes, I think it'll become even better.
What's the success failure ratio of your portfolio companies? Just let's go down the line here. Overall.
All right, so they're all still around, and they're growing, and they're
good.
building,
They're all
and
still
so
around. That's good.
So that's a success.
I agree. Because I watched in China, a lot of them deconstruct. So yeah, go ahead. Rahul?
One, I think in India, companies don't die, so they just stay around, right? So finally, for us, final outcome is how much money we return to our investors, which primarily get derived by companies that succeed really well, not about companies that are, floating around. So I would say if, a fund which has, let's say, 20 companies at a fund level, even if 7 to 8 return decent amount of money and one of them become blockbuster, that's a very good return. And we are on that path, as in, not that we have too many exits to talk about.
Ranjith?
Yeah, I think it's a similar story. I mean, in India, I mean, like Rahul was saying, I mean, we just don't give up. We just don't give up, right?
So none of your portfolio companies have gone under?
Not at all, not at all.
You haven't backed out of any of them?
Not at all. We've had some companies which have closed down. But having said that, it's all about, I mean, this is all about, how many of your, it's a portfolio kind of an approach, right, at the end of the day. And it all depends on how many successes that you have and blockbusters that you can bring about. But
it only takes one big hit to make a fund, like Draper Fisher Jurvetson with Hotmail from India made the fund, then Baidu from China continue to make the fund. Tesla today, the electric car, is in their portfolio as well.
So what's that expression? You don't ask a lady her age, you don't ask a VC his batting average. So I'd say...
I never heard that expression.
Well, you heard it here first. So I'd say, I'll sort of put it a little more nuanced because I spend time here and in the US. And the one thing consistent with the panelists and my colleagues here, the people here will seemingly spend more time keeping their companies alive. And I think in some ways, it's just maybe a perception of having better hope, or on the other flip side, you could say, opportunity cost of time and talent is less here. Personally, I would say the experience we have is consistent. We've got a lot of companies that get to a point where they can attract their next rounds of capital, but then sometimes, like companies in the VC portfolio, don't necessarily shift or don't zig when everybody's zagging, right? So it comes to that. So I'd say our batting average, because we're more product oriented, sometimes could be higher from a failure rate. But we also count on the success stories of our winners to pay for our sins.
Yeah, the hardware is much more capital intensive, so riskier in a way. From Mumbai Angels, just overall for Mumbai Angels as a group, what's the success-failure ratio?
So we've been pretty prolific in investing, and because they get in at an early stage, I think I would say that in a portfolio of about 70 companies, we measure our success rate by follow-on funding, which kind of provides exit to whoever wants to exit out of our members. So well over a dozen companies have done very well in terms of fundraising again. So I think it's a pretty healthy batting average for an early stage investor. And we've had some really good successes like InMobi, Mintra, and Exotel. So yeah, overall the members are quite happy, I should say.
Okay, let's please give the venture capitalists and angel investors a round of applause.